going to be a warning. Yes, a tough warning, because I truly believe that if you fall into the trap of believing this one fallacy, you could throw your whole portfolio, sometimes your net worth, completely down the drain. So you've probably heard, in fact, you have definitely heard that in order to do well in speculating or investing in junior mining or in most other endeavors, you must be a contrarian. I believe that. Of course I believe that. And in some cases, I need to be a contrarian as well. I try to do that by being fairly early to trends if I can help them, if I can help it, and by not going into FOMO situations where I know I will be at a disadvantage. If you're trading with the crowd, then guess what? You are the exit strategy. But there's an issue that I see with people conflating two different concepts. One is that being a contrarian doesn't mean what you might think it means. It's difficult being a contrarian because it means you have to go against the grain, but it doesn't change the fact that there's a massive difference between being a contrarian and being a perma-bear. And usually perma-bears are perma-bears against the whole market, the whole financial structure that we have in the world nowadays. Now, what does this look like? What is a true contrarian? A contrarian in our niche of junior mining stocks is right now looking into metals that you can't really pronounce or spell. They're looking at the stuff that gets a lot of hate. For instance, I posted not too long ago about silver stocks. I asked, hey, is this the bottom of silver? Because one very angry person was dissing silver stocks, and I retweeted it saying, hey, is this the bottom? And then the comments regarding that were very eye-opening, because you could tell they were silver investors and they were livid, not because they disagreed with the original post, but because they agreed that silver sucks, that you can't make money with silver, that silver will never cross and sustain anywhere above $25 per ounce. And so I was like, a little bell is ringing in my head, thinking this would be a contrarian bet to go into silver right now. That is what it means to be a contrarian, to look at things that are disliked, hated, and when you look at the stock industry or that particular niche, those stocks, those equities, then you see losses, you see sideways action, you see boredom, you see disinterest, you see people throwing in the towel and running into the next other thing. And so that is different to being a perma-bear. Case in point, you remember Michael J. Burry of Big Short, 2008? Yeah, that guy who bet against the real estate market in the US and won big. See, we have made his story into this gorgeous Hollywood character to aspire to. But I'm going to try to be a contrarian and tell you, you shouldn't try to be Michael J. Burry. In fact, something has just happened to his fund, and you can check this out with me. This is probably old news by now because this is being recorded, and the lesson here will matter in 2024 and 2025 and 2030. I don't care. It also will matter long term, and so I don't mind about repeating this. But it says here, late 2023, Michael Burry of Big Short fame closes his 1.6 billion S&P short position at a 40% loss. Guys, I'm not good at doing math, especially when the camera's on, but that's $640 million down the drain because he made the wrong bet against the S&P 500. And then as soon as he made that loss, he opened a position again negatively against semiconductors. Always, not always, but mostly trying to point out where the problem is, where the fraud is, where the structural weakness is, and just saying, this is going to crash, this is going to crash, this is going to crash, this is going to crash. It worked really well for him in the beginning, way back in 2008. I am starting to think, and I hope he makes a killing with this. I like to see people win, don't get me wrong, but it kind of makes you wonder, what if he had just stopped trying to be the guy who shorts things, who goes against things? Now, people want to be a perma bear or they want to be a contrarian or a perma bear, depending on how they see it, because it makes you feel really, really smart when it works. I mean, come on, let's face it. Some of us are here for the money. Some of us are here for the smarts, for the credits, for the applause, for the pat on the backs that we didn't receive as children. And when you poo-poo a thesis and you point it out and you say, this is going to crash, this is going to crash, this is going to crash, if eventually you're right, then you have bragging rights and you can say, hey, I told you so, this had no legs, etc., etc. But really, the saying, even a broken clock is right twice every single day. And you always get the fame of this misunderstood genius, right? Which Michael J. Burry definitely got, rightly so, of this guy who, had strange habits and was a bit of a loner and spent a lot of time listening to music and trying to, calculate and trying to see where the holes were. And the other thing is that the timing of making a bet against a thesis can make you a ridiculous amount of money, more so than going long. Because when you make a bet that's long, it usually takes a while to pan out. I mean, come on, I've been in uranium since 2014? It's been a long ride. It takes time for it to develop. When you make a bet going short, you will see in almost every chart, when the house falls apart, it does quickly. So you're going up the staircase, but you're going down the elevator, so to speak. So you see a massive crash. And most importantly, if you get it right, that's a massive if. But if you get it right, then you get it right at a time where everything else is falling apart and everybody else is losing money. So what happens is you make a ton of money on the way down, you close your position, and then you're sitting pretty on a lot of cash. Comparatively, you're a lot richer than everybody else, and you can scoop up all the assets that they're selling at a massive discount. That sounds like the perfect trading, investing Hollywood story, but it's so difficult to get. It is probably not worth betting much on that thesis. And the reason is the market is biased to the upside. And I have noticed this, and I'm sure you have noticed this. If you have given into fear porn, if you think that, probably shouldn't have said that word because I might get dinged on YouTube, but whatever, you know what I mean, right? When they tell you that the sky is falling and that you should put all of your money on a super safe asset and run away for the hills, leave your country and, leave everything behind. Those people are making money through your fear and they're not leaving and they're not doing what they're telling you to do. So beware of how people make money and why they're advising you to do those things. But most importantly, I think the takeaway lesson is humans are biased to the long side because we want to make a gain the easy way. We want more people investing in the stock market. We want growth. Countries in general do grow economically for a certain period of time. There are corporate profits. People get smarter. There's technology. There's innovation. There is always a technological advance that's going to make people produce more and extract more value out of assets. And so humans are the fuel to make things advance, things evolve, and the stock market is no different. So when you look at it and you think the sky is falling and you want to make contrarian bets, just remember the easiest way to make money is by going long. Always. And if you want to go short something, make sure it's a very small controlled bet. You don't need to be a perma bear in order to be a contrarian. There is a difference between thinking the sky is falling, everything is falling apart at all times, and that the dollar is just going to collapse tomorrow, which it might. I don't know. I think it's going to take a few more years, but I think we're going to get there. It doesn't mean that I'm not going to go long the market. It doesn't mean I'm not going to go long stocks or bonds or whatever else. You can go long most of the time. This is not financial advice, but that's how people have made money historically throughout time, throughout history, by going long, not by going short. You don't need to be the smartest, misunderstood genius in the room. So that's my lesson to you. If you think you learned something, or if you have maybe in the past fallen into the trap of being fearful and missing out on opportunities to invest, I want to know down here, because I was that person not too long ago when I got into this whole investing thing. I thought that, the dollar was going to end in 3 months and I had to buy gold and silver and protect myself. I didn't have anything to protect because I was broke, but, the fear is real. And I don't want to be that person who misses out on absolutely everything. And I want to take you on this ride with me. I want you to see what I'm doing. And if you see an opportunity, heck, make money with me. Try to not lose as much money as I do, but that's what I'm here for, to tell you what I'm seeing in the market. And I just gave you a big one. I don't know when this is going to come out, but silver right now is hated. Gold stocks are ignored, extremely undervalued. And I want to go on record. I think those two are the next big thing after uranium. I think that's the next thing, gold and silver. That's it. It's not fancy, it's not high tech, it's not exquisite, it's just boring gold and silver. That's it. Take care. Let me know your story down here.